Let's analyze the MicroStrategy stock and understand what's happening. We'll look at volatility, noting that volatility continues to decline. We'll also touch on support and resistance levels and options. We have significant resistance at the $2,000 level. Additionally, we'll consider Bitcoin's price and where the stock might go next. Starting from the beginning, we see that the stock has been in consolidation over the past few months. There was a 10% increase followed by a slight decline, and now the stock has slightly moved out of this consolidation, but it is not moving decisively yet. Where might it go next? First, let's analyze volatility. What is happening in the derivatives and options market? We see that volatility is starting to decline gradually. This situation is normal because the stock is in a bullish trend, and the less the stock moves, the lower the volatility. This is a market rule. Consequently, we might expect some sudden movement. Now let's look at the volatility smile. We see that for near-term expiration dates, volatility increases both for upward and downward movements. This indicates that in the short term, investors and traders are factoring in that the stock can either rise or fall. However, if we look at longer-term expiration dates, we see that the volatility for upward movements does not increase, but it does increase for downward movements. This is a normal situation where put options are more expensive than call options. This is partly because investors and traders hedge their stocks by buying put options, leading to such a skew. Next, let's examine the historical and implied volatility. We see that historical volatility is the gray line, and implied volatility is the white line. Currently, these volatilities are approximately equal. This is a completely healthy situation for the market. I always say that volatility always returns to its historical values. What does this indicate? It means that one can trade not only stocks because it's very difficult to predict where the stock will go, but also volatility. However, to trade volatility, one naturally needs to use the options and derivatives market. At the moment, the volatilities are approximately equal, or there is a slight distortion across different terms and expiration dates, but overall the situation is relatively stable. This stability is both good and bad. On the one hand, it is good because it indicates a steady market. On the other hand, it is bad because it does not allow us to extract profit from this situation. Of course, the more volatility discrepancies, the more money we can make. Now let's look at support and resistance levels. We see that a large volume is concentrated at the $2,000, $1,700, and $1,500 levels for call options. I would like to draw your attention to the $1,500 volume because it is very close and will have a significant influence. We see that there was some struggle in price movement, but in the end, we fell below this level. Consequently, it will now be difficult for the stock to rise above $1,500. These volumes should be monitored because they indicate points where investors and traders are concentrated and what they expect. Additionally, remember that the stock holds Bitcoins and moves with almost 100% correlation with Bitcoin itself. This correlation started back in 2020 and, with few exceptions, has remained almost 100%. Recently, there has been a decoupling. Bitcoin has not risen as quickly as the stock. This means that the stock grows with a certain coefficient compared to Bitcoin. This is good when Bitcoin rises, but if Bitcoin starts to fall, the stock will fall faster than Bitcoin. This decoupling is visible now, and I guarantee that the correlation will return sooner or later. Therefore, for the correlation to return, the stock should fall by 30%, which would be a normal situation and not critical. Now let's look at Bitcoin because it also needs to be closely monitored. We see that Bitcoin is almost at its historical highs, struggling to overcome the $70,000 level, which it reached back in November 2021. After a significant decline, Bitcoin is again at this level, unable to surpass it. There is serious consolidation here, and it's hard to say where it will go next. Again, I remind you that I cannot predict stock movements, let alone cryptocurrencies. It's hard to know where a particular coin will go. However, there are only two options. Either we will start a strong growth, although I do not see much trading potential, or we may face a decline. I lean more towards a decline in Bitcoin than any kind of growth because, in my view, there is a distribution of Bitcoin happening. Consequently, if Bitcoin starts to fall sharply, the MicroStrategy stock could also drop significantly. Incidentally, there were rumors about a margin call for this company back at the beginning of 2022 when the stock was nearly $100. It was said that if Bitcoin fell below $10,000, MicroStrategy could face a margin call, leading to a massive sell-off. Although this has been forgotten, it's important to remember if we start falling significantly again. I reiterate my philosophy: I do not know where a stock will go, and I cannot predict price movements. My main goal is to manage positions wisely, creating a strategy and position to make a profit regardless of the stock's direction. Additionally, I will show you the company's financial results and indicators. Let's take a look at what we have. By some metrics, the company is extremely overvalued and should currently be priced around $200. It has a high gross margin, but its operating margin is negative, meaning the company is essentially generating losses. In terms of PE and PS ratios, it is exorbitantly expensive, with a PE ratio of 250, which is practically unheard of. We also see the company has an enormous debt level. Microstrategy has taken on debt amounting to $2 to $3 billion, while it only has $47 million in cash. This is an extremely precarious situation, especially as the company continues to buy Bitcoin. Essentially, it is purchasing Bitcoin on credit. Personally, I find this unacceptable because if Bitcoin's value plummets, it's questionable how the company will manage its debt. Moreover, I do not understand why the company, in its latest report, stated that it continues to accumulate Bitcoin. When Bitcoin's price is at its historical highs, any reasonable investor would suggest it's time to at least partially lock in profits. If not selling everything, at least securing some of the gains. Even if the company doesn't want to lock in profits, it could hedge its risk using derivatives. But no, the company continues to buy Bitcoin, a virtually unsecured asset, and does so with borrowed money. In summary, the financials and strategic choices of MicroStrategy appear highly risky, especially given the potential for a sharp decline in Bitcoin's value. The company's approach to managing its Bitcoin holdings and debt could lead to significant financial instability if the market turns against them. Personally, I believe that sooner or later there will be a crash, and I don't think this company will survive in the long term. Congratulations to those who made 300%. You made a smart and wise move. However, I'm not willing to play such a risky game. Additionally, we can see significant additional stock offerings where the company sells shares to buy Bitcoin, even buying Bitcoin on credit. This can't end well. Remember my words, just write them down and see what happens to this company in a few years. I guarantee that nothing will remain of its former might. If you don't believe me, no problem. You don't have to believe me, but I suggest you trust the market. What is the market predicting? The market incorporates all available information, news, and data into its forecasts. I would not advise ignoring this. As we see, the market predicts that the company will be worth around $1,260. This suggests a significant drop, and if we look at December 2024, the market forecasts the stock will fall to $900. So, it's not just me, the market also doesn't believe in this company. Explain to me why the market predicts this decline. Again, I'm not saying the stock will fall right now. The company might still grow, but from a risk-reward ratio perspective, it's not in the investor's favor. You could easily lose more money than you earn. This is my philosophy, and it's my approach that I always adhere to. If you don't believe me or the market, then answer this: why is the company's director selling shares? We see that the sales are massive, amounting to tens or even hundreds of millions. In March and April, all the director did was sell shares in large volumes, and this continued recently. Some might come up with incredible stories to explain this, but if you want to make money, you'd be buying the company while the director is selling it. To me, this doesn't add up. Additionally, I remind you of a very serious risk, the risk of exchange closures. While exchanges are closed on weekends, Bitcoin can make a sharp downward move, and when the exchanges open on Monday, the company's stock could plummet by 30% or even 40%. This needs to be kept in mind. This is all I wanted to say about this stock. I also remind you that I have started managing a completely real portfolio from scratch, where I show which stocks I buy and sell, explaining everything in detail and as transparently as possible. Subscribe to the channel, and good luck to everyone.